What's up, everybody? We got Canny in studio. Look how close we are today. I told him, I said, make sure you smell good today, buddy.
It's going to be nice. I showered before I got here.
I mean, that's impressive. Of course,
Just for you.
We got Jimmy on the other coast in Florida. What's up, Jimmy?
Hey, what's up? I had to actually tell these guys that they can't sit on each other's laps right before we went live here.
Hey,
so this is a
hand on his leg without anybody knowing.
He does get very frisky, I will tell you this.
I'm a handsy guy.
Well,
holy shit.
Trading the Close live with us, and we're coming to you live from the Place Your Trades Network. Today we'll be talking about what Jimmy's seeing in the markets, what Canny's seeing in the markets, what I'm seeing in the markets, and of course we're going to be trading these event contracts at CME Group live. And today's podcast is brought to you by Tradeovate, which has built a custom app dedicated to trading event contracts. This is what we're all using at Place Your Trades. Use the link in the chat to start using the Tradeovate web app for free, where you can follow along and make your own picks. There's a link in the tweet. There's a link also in YouTube. Click that link, because today it's free to sign up. We're picking one of you guys, whoever clicks and signs up and sends us a mention at Place Your Trades on Twitter. You're going to be on here with us. And maybe, Jimmy, maybe we could just have him go right to the studio and sit next to you.
Oh, that would be great.
We'll pick somebody real.
There's plenty of room here. I mean, I could fit a guy in here, no problem.
Some really good ones. And of course, everybody, make sure you subscribe to the YouTube channel or follow us on at Place Your Trades. And we really appreciate you guys for doing that. So, well, Jimmy, we got me and Canny here. We're looking at you into the screen. You look good. What are you seeing today?
You know what? Like, it's today's kind of a continuation of last week. Lots of negativity, you know what I mean? Everyone's poo-pooing everything. I haven't heard one positive voice about anything. You know, wouldn't this be like a fitting time for everyone to just fucking capitulate, and then we get like a decent CPI print? You know what I mean? Fuck everyone. So yeah, I keep my options open as a trader. You know, I see a lot of negativity right now, and that's probably why you see like these 50 handle bounces that we get, these counter trend rallies during the day, you know what I mean? Because there's really not much to be positive about. There's really not much to be bullish about. But you get those overloaded boats, and then you get those ricochets, and they're vicious, the vicious moves.
Yeah, talking about nothing positive. I mean, I follow Canny's Be Dumb Follow Price, and how long has it been, Canny? Pretty much every day I read his stuff, and I love it because he's helped me tremendously with trading stocks. What do you say, everybody? Don't do anything.
Don't do anything. There's nothing to do. There are no setups. I mean, I look at a lot of different metrics, but the main metric, and I've said this the main metric I look at are how are the actual growth stocks performing, and are there any setups? And there's nothing to do. There are no setups. There's no merchandise to buy that's attractive. So it's just you got energy, you got strength and energy, which is not what you want a bull market being led by. And so as a result, we're doing a lot of, we're all learning how to sit on our hands in my world, because swing trading, position trading, there's just nothing to do. So you stay in cash and you wait until you get your fat pitch. And right now we got no fat pitches.
Yeah, one thing I want to mention is we are on YouTube here, but we also now are on the Place Your Trades Twitter. And so Jimmy and Canny, why don't you guys go out there, go to the Place Your Trades and retweet, and everybody can watch us. That's allowed on Twitter right now. And we're going to see. I've actually been getting some DMs. I got some. It's pretty interesting to see who's DMing us. About who wants to come on the show. Just go to search Place Your Trades on Twitter, and there's a tweet that went out about us streaming there. So we're going to be streaming now all the time on Place Your Trades Twitter, which is I think can be really cool for all of you guys, because if you're on Twitter, you can just sit there and watch. So obviously follow along with at Place Your Trades on Twitter if you're watching this on YouTube right now. And one thing I want to talk about with the market lately is that, for me, what I'm doing, why I like being on the close with you guys for this stuff, is because these event contracts, I know a lot of times we have our morning people coming out talking about what they're seeing for the day, and really it's a tough gig. I've actually I took some of Merritt's picks today. I don't know how well they did. Wink, wink, wink. But I think that it's hard to pick it then, because we as traders, and even people that are new to this business, which I think obviously these are great for, until the day sets up, up, Jimmy. You get in this last hour. I have found the last hour, we get near these strikes.
Right.
Sometimes you get this opportunity where, like the other day, they were 75 cents to close below 3,600 on Friday. And I said, you know what? I'll buy 10 or 20 of those. It cost me $15. Maybe you make 400 or something, where there's versus me trying to be short and catch that move.
Right.
That's one of the things I think, that people misunderstand about them. And I think that when you're this volatile, these strikes are coming in play, man. Don't you see it, Jimmy?
Right. And it's like, and like you said, you can take teenies, which a teeny is like what they used to call in the pit, a really cheap option, a wingy cheap option. You take flyers on them usually, and they usually, they're low probability and everything. And that's why they're cheap. But in this market, in this environment, you can take shots on teenies here and pick up stuff super cheap and have the market move 30, 40 handles at the end of the day and go in the, and have your options go in the money, or and have your trades go in the money, which is like fantastic. It's the best environment for a product like this, because you can bet cheap and make a lot of money. I mean, even today, like when the market ripped up and I could see that, it was gutting anyone that was short, and it was squeezing everyone in that like intraday, squeeze. I went shopping for like some downside, like the 625 strike, and you can work limit orders in this stuff too. So I just worked like a 450 bid on it, got some, and when you think about it, like you don't have to trade them big or whatever, but you can make real money doing this too. You know what I mean? I paid 450. You could have bought 100 of them there, and turned around and here's the market stretched. It just went 50 ticks. And like normally, if you're going to trade a future at that moment, you might lob them in there, but like they just keep taking out your stops. They keep squeezing you. You're not really, you're in the middle of a squeeze, and it's so hard to manage that risk when you're getting squeezed like that in the futures. But with options in these event contracts, that's when you can take a shot. Like, all right, I know I'm getting squeezed. I feel like we're going to come back down, and you take a shot on those lower strikes, and they get super cheap. You work a bid. You don't have to go to the market for it. You get filled or you don't get filled. And if you get filled at your price, you have a great opportunity to make 3 to 1 on your money, which is,
yeah, I mean, that's
it's late in the day. Why not?
And the one thing, so I'm going to show everybody here really quick. So I have pulled up the strike. So when you go to the apps again, if you want to get the app, all you have to do is go to placeyourtrades.com, click get the app, and then bang, it's going to take you to here.
Click that first button.
Click that first button.
Just click it.
All you do is put your email in. It's free. You can get the app. And if you want to start trading them, you go through the account process later. And like I said, we're all trading them. And one thing I want to show, so this is the one thing that I look at all the time. It's like, okay, we're like towards the end of the day, we've got 33 minutes to go. And honestly, look at how cheap the 36.50 yes is, and this is part of what I like about, these contracts, especially in a bear market where you go back to Jimmy, you were saying this sucker could squeeze up there. No problem. You can see it's $2.
It's $2.
$2 to close above 36.50.
Pays 20. Remember, pays 20.
It pays 20.
So that's a 10 to 1 trade right there.
Right. And it doesn't even have to, and remember, it doesn't have to cross that strike. All it does is have to move towards that strike for you to all of a sudden to be able to even trade out of it for a scalp or make some money.
Flip it out at 5. Yeah, I do that kind of stuff all the time, where I'm taking the other side. I'm getting the reaction off of a level that I want. And a lot of times, if you're buying that cheap stuff, you can buy it in that 2 to 5 range, and then you can get a 3-4 point move back in your favor. And I cover off a lot of times.
Yeah.
Buy it for 3, sell it for 6.5. Like I'll do stuff like that all the time. It's great.
Yeah.
Every trade I get into it for size, but I'm immediately peeling some off when I see the light of day. It just helps me mentally to be able to, like, even if I just sell a few, skin a few off, and it frees me up. You know what I mean? Now I'm like, all right, my break even's a little lower. I got a little, you know what I mean? But that's, and these things, you can do that. It's a liquid market.
Jimmy, the beauty of it is for people that are looking for stock people like me who are looking for a way into futures. Right. This is like a gateway drug for getting into futures, because like your risk is so small because it's a non-leveraged product. So if I just want to, literally, I could put a $50 bet out there. I'm exposed for $50. I'm exposed for $25, whatever.
Right.
If it's at $3, or this is right now, it's at $5. Wasn't that same one just at $2?
It's funny. It's popping a lot because
people are expecting it. They're bidding into it because they're expecting it to go.
Yeah, and it's hopping around a lot. And I think
now
right now
dropped.
when you have, especially when you get towards the end of the day here, this is when I've noticed they become very volatile because obviously market makers are looking at these going, how much of a market do I want to make on this? Because going back to what we said earlier, Jimmy, right? We could, some of these strikes that are so far away, they're getting hit. And you're like, it's, it's incredible. I mean, personally, I've done pretty good with these, almost exclusively trading the close. So I think maybe we just dig a little bit deeper today, and maybe we just go and let's just make some picks with 30 minutes to go here on the close. All right, now I'm going to do mine first because I'm already got some of these. This morning, I bought the 36.75 yeses. I thought we could potentially close above there. Those are kind of not working right now. I don't think that that's a very likely scenario. But for me personally, I've got my phone up and I like these yeses right here. And I am going to take the yeses above 36.50. And I just think that short squeeze rallies on days where we're not on the low of the day is kind of something I've been looking at. And I look at it like this, if I'm trading outright futures and I don't have a strategy set up here, this is an easy way to play it. So for me, the 36.50 yeses, because I don't think it's a lot to really achieve here. And I look at it and go, I play this squeeze because it's really a cheap play. And that's just the way I look at it. That's the trade I'm taking on my phone.
I'm taking the 36.25 nose. It's still trading above it. I think it's going to get weak into the close. I think we already had our shakeout short squeeze to the upside. It's having a hard time building any further momentum. And so I think it's going to fail here. I like it below 36.25. So I like the 36.25 nose. They're what, 675, 650? Yeah. Okay. I'm in that trade.
So what's interesting to me about, real quick about like the 36.25 nose, I keep seeing them get bid up here, is that they still, I know we're only $5 above there, but we're above 25. So to me, I like it. You're right, Canny. To me, this is like one of those where it's got to be around $5-6 for it to be interesting to me, right? Because I think about that too, everybody. When you look at some of these picks, when you're near at the money, and Jimmy will probably maybe be better explaining like how that works. Like when you're basically at the strike, then they should be priced around $10. But if it's above it, that's why you could go in and work a limit order on that. So Jimmy, what are you thinking?
Right, and it's just like it trades like options. Like when you're at the strike, it's basically a 50 delta or a 50-50 proposition, whether it's going to go back or forth. If you see like an anomaly where like it's the bid and offer is ass, that's probably some skew involved there where people are leaning one way and the market makers are are leaning that way. Especially if you get like a late move in the day and they come ripping up to a strike, like that. If you don't want it to come to your strike too early in a market like this, because the market makers will give it to you knowing that, it'll come back and ebb and flow. Like the play that I made today, but, and this you kind of have to start out with a good play to be able to do something like this. But like, so I waited until the market squeezed up and popped and worked a 450 bid in the 625 nose, I guess would be. I got filled on those. So now at this point, because I'm like banging around on top of it, I'm close to my strike and everything. Now I can kind of like what they would call like collar them off or almost strangle them. It's not really a strangle because it's kind of like a spread of a spread. But I could do Tony's trade, pick up the 650s cheap here, and kind of have like, the market can go. So now I own both strikes for $5 or $5.50. You know what I mean?
Yeah, with 30 minutes to go, I bought 10 of them at $2.50, and they're at $2 right now. But once again, I feel like it's just I just look for the squeezes, and I've had some success with them lately, just kind of playing that way. Canny, one thing I wanted to talk to you about today, because we hear, Jimmy and I come from the future side, you come from the stock side. Yeah. What are you seeing internally that tells you about today?
Well, first of all, I look at the AD line. We're at like negative 1,000 right now, and we've been down all day, and that really hasn't moved a whole lot. So to me, it suggests heaviness that isn't necessarily going to get resolved at the close. We're not far enough deep in the negative on the AD line for it to really be like what I would consider a trend day. But today going in with the bond market closed, and so we're trading a little bit thinner. You figured you were going to get a two-way shakeout was sort of my thought process going into today, and so you're taking the other side of the breakouts on those trades. It closing somewhere reasonably close to the middle makes a lot of sense to me. I'm looking at my stocks, and when the core stocks aren't really doing it, we've got a lot of red. We got a lot of red in all the growth stocks, and so if I'm looking for any kind of positive, I'll go and I'll watch Apple to see how I want to trade Apple into the close. Because typically, if you want to move the S&P or the NASDAQ positively, they'll push it through Apple because that's the biggest component of both those indexes. So that's kind of how I use my stock knowledge to sort of map out how the indexes are going to roll and how these futures are going to work out. But specific for event contracts, I love being able to use it like this because I can control my risk in a massive, massive way and make small bets. For me, it's just it's fun. It's fun for me. It's not my primary way of making a living, obviously. It's not my primary metric, but it's a lot of fun for me to kind of gauge, and it keeps me involved in the market while I'm waiting for my primary setups. So that's the thing I think I've really appreciated.
Isn't it funny? People get a little bit weirded out over binary options, but in reality, if you're good enough to trade the market and make money for a living, why the fuck couldn't you do this? Like if your opinion matters and you make money on your fucking opinion, well then these things, you can make money on these things. You know what I mean? Like people overthink this bullshit.
Right. It's no different. I mean, it's just another way to trade your sense and your feel and the way that you see the market in a very controlled fashion. It's no different than options or stock or whatever, as long as you're managing the risk. This thing builds in risk management like crazy. So it's already there for you. I love the vehicle.
Two things I want to say. Thank you, Tommy. I want to show everybody. You can see here that I actually bought them. It shows your position there. So when you go from strike to strike, boom, it'll show you. Here's the 20 I bought this morning at 36.75. Like I said, for 3 1/4, I said you never know with these squeeze rallies. It did go up to. I have a little different way that I play these than these guys. I don't really cover anything. I let everything close because if I buy them cheap, I always look at it like this. Unless it's my mindset is I just follow that close, I guess, or no. Some people are covering them. I'm not. But that's just the way I've been playing it. And one thing I want to say about these.
Well, you're doing better than I am. So
I've made a little money on them. Nothing crazy, but I will ask you guys this. I want to ask Tommy this. The guy who's watching and trading Apple, or a lot of the stock guys, because those are your people.
Right.
Right. What do you think about this as the pathway into futures versus going in for somebody who trades, stocks to coming into trading these? Versus trading micros or trading, which we want people to do. I think a sophisticated trader definitely can, but I think this is a great pathway to futures.
I think it's a great path. It helps you. It forces you to start gauging and understanding the ebb and flow nature of the way the indexes and the way futures work, because they operate differently than stocks. I mean, that's the thing. I've always I watch the futures all the time when I'm trading stock, but I don't really trade futures because they have a back and fill mechanism to them that is much more orderly and I don't know what, and stocks don't trade that way. Sometimes they don't because because it's the short squeezes are more violent and they've got agendas with certain stocks because there's specific news or whatever it is. And so
plus people buy stocks and don't sell them. People just buy stocks and fucking hold them. You know what I mean? Like, people don't do that shit in the futures. Like you don't buy a future and are like, fuck this, I'm holding this for 30 years. This is a great buy. No,
right. I mean, trying to hold a future that long. I think the one thing that it does help you is holding that winner type mentality. It teaches you the patience. You made that call. You don't have to worry about your stop now. Either your analysis was right, which doesn't have to be super complex, obviously, because you're just picking a price. But it gives you the confidence to hold into something because you already know the loss before you get in. Pex and I've talked about this. Jimmy, you and I come from a background for where the first thing they tell you is know you're out before you're getting in. This is already you're out before you're getting in. And I think that dynamic when you get into futures, I mean, the people that regularly trade futures all the time obviously love the leverage, and that's why they trade futures. We get that. That's why I'm in it, right? I mean, this is a different thing. This is something for me to express, my thoughts and my opinion on the market in a way where I could let this go. Like at the 3650s I bought, what am I going to do? Cover them for $1 loss? I'm just not going to cover them. Maybe they blow up on the close and you win 9-1. Right. That's the way I look at it.
And that's worth it.
And sometimes the bet, the way you look at it is the trade is going to be a heavier thought process on you where you might take more or less, but you could take as little or as more as you want.
What did you pay for those? $250?
$2.
Yeah, you can see right here. I bought one earlier because Canny was asking me how it was working. I bought one at 1 at 575, and then I bought 10 at 250. So my average is 11 at 255. So like I said, I bought them at 2 1/4, and honestly, they're still at 250, 2 1/4. I don't know, man.
They may trap it right between.
Buy more.
Dude, I mean, seriously, this thing could go 14, 15 handles in the closing range. You know what I mean? Like,
so one thing I want to get to before we get to the close, everybody, remember, we got a link in the YouTube chat, and we'll put a link in Twitter. You can look at all of our Twitter channels to participate in this. And the reason why I'm looking down is not that I'm not interested in looking at Jimmy's, beautiful glasses that he's got on today. He doesn't look as tan today, though.
No, he doesn't. He's a little paler. I did notice that.
Were you sitting in all week?
Not as pale as me, but
I did. I was painting all week.
I know. And normally he's doing push-ups and doing Red Bull vodkas before he comes on. So it's not sunburn. It's probably
that's your fault. I mean, if you want me to trade the close, I'm gonna have to have a high noon before it.
He's got to ease his way into the evening.
Slowly.
So I'm looking at all these people, and I appreciate everybody. Like I said,
this thing's just stuck.
I know it's stuck.
Stuck.
It's the Columbus Day kind of nothing. So who is going to come in with us? You know who we're going to have, and I'm going to make this pick. I'm going to kind of just go ahead and make this pick because I know that you guys can't see the Twitter, but who sent me a DM? You know who we're going to have on next week, Jimmy?
Who's that?
Macro Tactical.
Oh, right on. I love that dude.
I don't know if Canny knows him.
I do not know Macro Tactical.
Well, he's in LA. He drinks probably more than Jimmy,
which is a feat.
So it's going to be Macro. If you're watching, I'm sorry. Hopefully, maybe we'll still have a cocktail on the close. But Macro Tactical is the winner. So it's good to have you aboard, buddy. Coming on, looking at the event contracts. And
I'd like to. Yeah, I've never talked to that dude. So I'd love to see. I
look forward to meeting him.
Yeah. He's a cool guy.
Yeah, I think we need to make a trip to LA. We need to do a live one there. Just the guys.
Exactly.
Go in LA.
Yeah.
How fun would that be?
Macro, you better put us up, and we better have some night action. We're bringing you on next week. Don't let us down, man. Come on. So Macro, cool. So if you guys don't follow Macro Tactical on Twitter, he's a really good guy. But so that is.
By the way, I'm hedging myself emotionally right now. The 650s are getting they're getting cheap. So
I'm still holding out for my 36.25 nose.
It's easier to bet a few bucks on this right now than to smash every piece of furniture in my office when it goes up there and I don't have them. So fuck it.
Yeah.
I mean, you guys have each other to hold if the trade doesn't go right. You can
really appreciate that.
As soon as the show's over, you guys can hug and cry with each other. I'm alone.
You see this, Jimmy?
What's that?
On the desk.
This is what me and Canny have to keep on our desk.
Air aspirin.
Oh Christ!
I
eat those like Tic Tacs.
Hey, this is what happens, man. You do this long enough. This is like, to me, I pick a side, I let it go. If I'm trying to be long right now, I'd probably be in and out so many times it'd be ridiculous.
Yeah.
And getting chewed up.
Just getting spit up. Let's look at something here. Let's go to the NASDAQ.
What's the NASDAQ look like?
The NASDAQ, I haven't been touching it much lately, and this is sitting right at 11,000. And part of me feels like I want to buy it. Well, the 11th, look, so
it is so thin right now.
Look at this 11,000. Yes, it's 13 1/4 when it's only $14 above. That's like a bid and offer difference. It's nothing. It's 1250 for the yes. This NASDAQ is, but the NASDAQ.
I would take the no on the NASDAQ too. I'm just.
You know what? And I never trade the NASDAQ because I used to trade the NASDAQ and it's such a fucking wild beast that I got too old for it. You know what I mean?
It's its own world, man.
Right. But seriously, I could trade the NASDAQ again doing this shit. Cause you know what I mean? Like I have an opinion. I just don't have the balls to do it anymore.
Well, because the
you know what I mean? I have a
relevant.
kid in college. I can't fucking trade NASDAQ futures. What the fuck, you know?
Right. But Jimmy, it's because the levels are still super relevant. But the whipsaw and the I mean, the shit you go through within a 3-minute bar sometimes is unbelievable. But
it is.
the levels still play themselves out. And so a product
They
like
do.
this it makes a ton of sense.
And you know what? It's probably because it's so fucking scary. Like I've noticed that like markets like natural gas or NASDAQ or whatever, they sometimes trade like really technical because it's so fucking scary. Anyone that's trading it, like that's all they have to look at and like pray for because it's like so whippy and so volatile. And you know, and a lot of times you like miss those spots because you're like, ah, Jesus Christ, I don't even want to do it. And then later on, you're like, oh my God. The NASDAQ is full of those spots. It actually trades really well. I just don't have the balls to trade it anymore, you know?
Here's what I would say about the NASDAQ. What I've learned about it, and actually for futures, it's become my most popular product. And I trade it way more than the S&P. It's funny, I'm trading the closes on the S&P and this more because I feel like price matters. And when you have a significant level like the S&P, to me is, I think it's a clear vision that I have how they'll close. But the NASDAQ, to me, why I like them more on the trading side, like the micro side, is because if I like an area, when they come through that area, I just kind of click into my area and I just take them in little by little. And it's like, it tells me either right away if it's going to be something that's going to rotate or not. So I don't look at the NASDAQ really in prices. I look at it almost as like in boxes of prices, right?
Sure.
So when they get into those areas, I actually take my dome down on the NASDAQ and I put it 5 points deep. Sometimes even on Fed days, it's 10. Because if I like an area, I am now not clicking and micromanaging something in for ticks. I look at every 5 points or 10 points, and it helps me visually see the day better. But predicting close on those, I think, is just so much harder because, like you said, it's just above 11,000 when we were watching it. It's like that thing can move 40 handles on the close. But I've been kind of going more S&P in that. But here's the Russell.
That's a really great idea.
Here's the Russell. You know, the Russell to me, I think, is a product that I think will be popular here too. Have either of you guys, I mean, maybe Canny, what is it? I mean, tell me what you've been seeing. I know that some of even the stocks that you trade some of the names I've never even heard.
Sure,
what do you think about the Russell?
I sort of think it's a bastard stepchild of all the indexes. I just it sometimes it leads, sometimes it lags, and it'll lead and then it'll lag all in the same trend. It's just, I find the Russell to be, personally, I think it's really difficult to trade, but I do trade a lot of the stocks in the Russell because it's just, there's so many different, like you don't get themes like you do in the S&P and the NASDAQ where there's consistent flow. With the Russell, it has more of a chop factor to it because it's much more individually stock driven, in my opinion. And so you can have little small caps in this area that are doing well, and then another area of the index, they're just getting the shit kicked out of them. And so it causes, so I don't spend nearly as much time focusing on levels for how the Russell trades, even though I'm trading an enormous amount of stocks that actually are part of the Russell, because I focus on where the money is hot. And you can have hot money and super cold money inside the Russell all at the same time, which to me makes it very difficult to trade.
Jimmy, do you even look at the Russell at all?
You know what, like Tommy said, like the Russell seems like a second derivative of a lot of these markets. And when I've tried to trade it, like it has a lot of like false breakouts. It has a lot of like areas where you're like, oh, Jesus Christ, this is the time it's going through this, you know, and then it doesn't again inexplicably, you know. It's a difficult product to trade. If you were going to trade like dudes that trade the Russell, they trade the Russell. That's like their gig, you know what I mean? And that's all they trade because it has such fucking annoying little nuances. Like you have to trade the Russell. That's got to be your baby, you know. Like people don't fucking dabble in the Russell. It's too annoying, you know. You have to go full time or you know. And personally, like I watch it and stuff, especially like if it's the issue at the time, you know, if it's the one that's like causing the problems, then I watch it. But I don't really trade it that much.
Here's what I like about it, and I use it for my swing account only. I don't really day trade the Russell at all, but I like it for the swing factor because of exactly what you said, Jimmy. The one thing is about it is that you can't trade this as a breakout thing. This is a market that actually, if I feel that it's built a bottom or I feel like it's built a top, and because the way it moves, I'm able to sit in a position a little bit longer term. I think that the intraday action for this, like you said, you either have to be fully committed to trading this, that type of style, because it is different from S&P and it is different than NASDAQ. It has a combination feel of both. But when it goes in a direction, it kind of will stay in that direction a little bit less noisy than the S&P or NASDAQ. So I have moved into only swing trading it. And, you know, last year was one of my best markets because when it was going, it was just kind of staying there. And I just was not getting squeezed out of it as much. NASDAQ, the further out I go, I feel like I get all messed up. Like I have to be intraday, taking that level I like. If it goes, great. If it doesn't, I'm out and like, okay, it's over. In S&P, I can scalp. I can even get, you know, more granular and more short term, because at that point, price matters so much that if I really like something, I can keep trading in and out of it, which hence goes back to why. Let's see actually how the closes go here with S&P. I mean, it's just sitting at 35. I know we're actually.
It is. It's coiling though. So, you know what I mean? There's potential for it to release out of this little coil. I don't know where.
I'm not liking its action. Well, the interesting thing for me is like I focus on the indexes very significantly in downtrends. In uptrends, I don't pay that much attention to them because I'm very focused on the key stocks and the stocks that are leading the market, and I trade those. And there'll be days where you can be down 1% in the S&P or in the NASDAQ, but your leading stocks are still performing. And so I focus on the stocks in uptrends. And so I don't really, like in the Russell's, far and away the one that I pay the least amount of attention to. But in downtrends, I don't focus on the stocks. I'm first focused on the indexes because those are the only viable things. For me, those are the only things that are viable for any kind of trading when you're in a downtrend.
You know, for me, it'll be interesting to see what happens if we get into a bull market anytime soon. Hopefully, I think for a lot of the stock people, they're hoping it's sooner than later. For us futures people, it doesn't matter as much. But what I think will be interesting with these products is when you get in those grind up, Jimmy, remember you and I were talking about maybe last year, we're like, dude, how horrible is this? You and I were, we're literally like, this is brutal because you know you want to be long. You don't get a setup. This is something where I just take the yeses every day in those type of environments and just go. And those now you trade them a little bit bigger because the bulls just grind them up.
Low vol grind up is
low vol grind up for us is brutal.
That's my favorite. That's my favorite environment because the specific stocks are just rotating explosions. They're just rotating explosions. And
and you know what, this like sell off too, like the entire bear market that we're like sitting in has been really frustrating to like play short. You know what I mean? Like there's been other bear markets where I've gotten short and fucking had tremendous rides and everything, but this one's tricky. You know, like the vol market is tricky. Everything about it is there's a lot of squeezes going on. You're never that confident. And probably one of the reasons is because the economy is actually doing well while this shit is going on. You know what I mean? You have these two like opposing forces. It's like normally just, you know, in these situations, all hell is breaking loose and you're like, oh, fuck this. And you sell with both hands and walk away. But like right now, it's like, I know like the overall, I know the overall wind is to the downside, but there's still like, you're still getting like pieces of good news that are like, it's hard to grapple with. You know what I mean?
Good news. I mean, is the non-farm
good news is like
number? Is that good news? I mean, because some people
right. I mean, what is good news?
The economy's still healthy, but the market interprets this as bad news because it means that, you know, the Fed's still going to do what they're going to do.
Right. Good news is actually like shitty news, or you know, like anything in commodities or energy that's, you know, bearish. But it's a mixed bag and it's really fucking tricky right now. You know, this is the most difficult macro environment I've ever seen. Probably anyone's ever seen like that. You know, because if you've seen a more difficult environment, you're dead. You know, you haven't been fucking you know.
For me, it's nice to hear guys like you saying that from your side of the world, because in my world and within my beat 'em follow price, I mean, we're literally looking at the market and going, from our eyes, we see no opportunities. We don't see anything to do.
Right.
So that typically It doesn't happen very often. It just doesn't happen. We've had it for like 9 months now, where there's just very, very few opportunities, one-offs here and there that won't drive a market.
Yeah.
So we're waiting for that desperately to change, because I'm tired of cash.
Well, we got 6 minutes left on here. A couple things I want to talk about with each of you. Kind of get your views on into the end of the week here as we get near to see maybe if Ellie maybe gets his 3650s. It's still possible.
You're not getting your 3650s. I think there's more of a chance of me getting my 3625s.
We're right. I know we're both toast. Most likely. So Jimmy, we'll go to you. Then we're going to go back to Canny and kind of close it out. The one thing I always go to you for, and I know a ton of people do, what is the VIX telling you? What are the options markets telling you? Give everybody that two.
They're pretty verklempt at the moment. The curve is wonky. Anytime that you see, like when you start seeing like those front month futures get above 30, it's like there's issues out there. It's whether or not they can hold them above 30 for a few days. Like it's hard to hold VIX above 30 for 3 days. You have to either like keep having an issue within the market, keep making lower lows or whatever. But like the vol market is still behaving the way it's behaved the entire year, which is like a controlled demolition of this market. And we're seeing, and that's what we see in like the S&P and in stocks. It's not like we don't have this day where it's just like blah, you know what I mean, when they sell everything, even the good stuff or whatever. They're selling like the mispriced stuff. And we go down, and we bounce. It's like, you know what I mean, like, and that's how the vol market's been this year. It's still that way, although I would say that it definitely kind of seems like the curve seems like it's a little bit more nervous about like late November and December. And it's and that could be just because like how the fuck is Europe going to deal with, winter and cold weather with their energy issues? You know what I mean? So the vol market, it's not screaming, we're going to crash. But it's not telling you to be comfortable. You know what I mean? It's that like middle, like, oh man, we're going to keep banging. We're going to keep grinding down probably. You know what I mean? That's what it's saying.
Yeah. And I think just from my perspective, who doesn't see that kind of stuff the way that Jimmy sees it through the VIX, and Canny, I don't know how you feel about it, but this feels like a reverse bull market. And that's why we were actually talking last night on Twitter. I said, I feel like we're finally starting to see some fear. So maybe we get capitulation. And it's just like, again, today, markets are thin. It tries to do it. It can't do it, right? I feel like because of that maybe elevated VIX, because maybe everybody is still anticipating a strong sell-off, that you have this market that kind of grinds lower and maybe a little squeeze into the close, but nobody ever just lets it go because it feels like in some way maybe they're just hedged a little bit the whole time, right?
And, from my world, it feels like just a general lack of interest. Like the general interest. Nobody wants to commit. No big money players want to commit risk capital to this market. They're not like wild sellers. They're just not willing to commit whatever capital they've got to risky assets. And that's what growth stocks are. And the market is at its strongest when big institutions are pouring in their capital into risky assets. That means they trust what the future is going to look like. Look at this. It's coming down for me.
Yeah.
On my 625s.
And we're not seeing that. We're just not seeing risk capital being put to work in any kind of meaningful way at all. If you get a breakout, it gets stuffed. There's not 2 or 3 or 4 days of that continuation volume of money pouring in. You don't see that ever right now. So, to me, there's a lack of interest. I mean, I remember back in 02, 03 when that went through, it was like that thing just kind of ground down and then wiped out a generation of traders who like literally lost interest in the stock market. And I feel like we're trying to maintain interest in the stock market because we have so much more social media to be able to interact with people. But you can kind of feel that starting to happen simply because we're just like in a low vol bull market that I love.
Yeah.
This is kind of what this almost feels more like a low vol bear market where it's just going to grind us into submission, and I hope it's about finished.
Yeah, because all of us, I mean, let's face it, you know, we've been all doing this over 20 plus years. At pretty much every low, except for maybe the exception of the 2001 into 2003, it was almost all capitulation, right? We almost always knew, you know, the 666 low, the Mark Haynes when he called that, or whatever that was, right? Like it was almost like this moment where everybody almost knows it's the low. At this point, I feel like so many things have changed where you have market prices that are so much higher. It's not like 2008 where you have news every day, where every day it's like it's Lehman, it's bear, it's downgrades. You just it's this kind of unwrapping, peel back like an onion type move, and it's just very, very difficult for, like you said, the macro and for the traders as well. We got a minute left. We're going to see how it goes. Maybe Canny gets his. I didn't get mine, but I want to show you. Mine's going to be a loss. Once again, I go back and look at it. I did 11 at 250. If you do this, it cost me $25.25, right? I think that's more than Canny paid for his haircut, though, don't you, Jimmy? I think it was pretty close. It's pretty.
I would say around. I would be tick around there.
Yeah, right around.
Oh,
there,
I don't have a lot to. I don't have nearly as much to cut as the two of you do.
So it's right there, right on there. So for the cost of a Canny haircut, I could have made $175 on it, just to give you guys an idea. And before we let you go,
I just might pay for my next.
Where did that? Where did we go out here? What's going on?
We're going to go out. Well, it's going to go up. We're going to see where they settle. But
right on the strike.
Remind everybody what they need to click.
So one thing I will say too is if they settle exactly on 36.25, the nose win. Why? Because it didn't settle above it.
Damn.
Okay. So that's the ties go to the nose, right? Remember, everybody, go to placeyourtrades.com, click get the app. All you have to do is click it. It takes you here. Click and sign up. It helps us out. We're trading the event contracts. You can go there. You can sign up for free. You know, you don't have to worry about funding your account and doing all that stuff. That's down the road. Go there and sign up. We got the link in the YouTube chat down below. Click the like button if you enjoyed us. Also, remember, welcome Twitter. We are now going to be streaming at Place Your Trades on Twitter, so be sure to follow us there and retweet the stream if you enjoyed it today. And follow these two knuckleheads on Twitter. Me, I don't really care. You don't have to follow me, but follow these guys.
I say you follow it.
Yeah. That does it for today. That's right, boys. So next week on the close, who are we going to have? Macro
tactical. Right on.
Everybody that participated in this today, that's so awesome. Also, don't forget, if you hit that reminder button, you can be reminded of when us maniacs go online.
I don't think I got paid.
I don't think he did either.
That's not good.
No haircut for Canny next time. Peace.
I get nothing.
All right. Good night. Peace.